In my last video, I talked about how the Canadian dollar is tanking against the USD and what are the reasons behind it. Okay, so interest rate is not the only reason. There are some economic reasons behind that downfall as well, and the short-term move is looking to get further deteriorated. So I get a lot of questions and comments upon that video, and a lot of you asked, okay, Yasin, we get it. We get it. The Canadian economy is weak. We get it. The unemployment is going up, and the short-term outlook doesn't look pretty. And we know that the Canadian dollar is not going to come back to its level anytime soon. Okay, so we get it. What do we do to protect our financial future? I think that was the main question a lot of people were asking. So let's discuss that in this video. The first thing that you should do is to see if you can move down south, okay, in the US. Because when it comes to economic growth, when it comes to getting higher salary, when it comes to getting lower taxes, and when it comes to getting more career opportunities, there is no better country than US in the world, hands down. Okay, so if I have a choice to leave everything behind and move to the US, that's the best decision I could make. And I understand that not anyone can leave everything behind and move to the US. Okay, maybe 20%, 30% of you may take that decision, but the rest will have to survive in Canada somehow. So let's discuss, if you cannot move to the US, what else can you do to protect your financial future? If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and it allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. Number one thing I'm going to do is, if I cannot move because of my family reason or other commitments that I have, then what I will do is to make sure that whatever savings I have, I will keep them in the USD. And when I say savings, I mean the emergency fund, okay? The fund that I need for at least next 6 months, okay? So I have to have emergency fund available in my bank account should I need in the next 6 months. So if you have that funds available, try to keep them in USD, okay? Outside of any fund, more than 6 months of your expenses should be invested, okay? If you have not started investing, I highly recommend you to start right now, okay? There is a Questrade link in the description below. You can click on it and you can start investing right now. What do we invest in? Okay, the stock market is all-time high. Okay, I get it. But if we look at the last 20 years of data, we have seen the stock market has been performing 10% annualized return consistently, okay, on average. There have been some ups and downs in those last 20 years, but the stock market has been performing 10% annualized return over the last 20 years. So if I have to start today, I will pick an ETF. Let's say the S&P 500. If you're in Canada, you can buy Vanguard S&P 500 index in Canada, or you can buy an SPY mutual fund in the US. But try to keep them in US dollar, because if the Canadian dollar is going to lose its value against USD, you should keep your investing and savings both in US dollar. Okay. The only downside is any dividend income that you get from the US listed stocks, the US government will take 15% withholding tax right away. Okay, that's the only downside risk. But you're being protected against your currency depreciation if you invest into US based stocks. Okay, so first thing, keep your emergency funds in US dollar. Whatever left outside your emergency fund, you invest into the stock market. Now you can pick and choose as well. You can buy some gold, you can buy some oil stocks because oil is getting cheaper. You can buy some cryptocurrencies as well, because if I was you, I would definitely allocate my funds in this order: stocks, gold, crypto. And then in stocks, I would be very selective. I will try to invest into technology stocks, the stocks that is going to benefit from the AI. Okay, now you can pick and choose yourself, or you can buy some AI specific ETFs as well that are in the US, in the market as well. So keep your savings in USD, buy some US listed stocks, and keep them for the long term. Dollar cost average: if the stock market goes down, you buy cheaper, and then you keep buying it over time. And when you look at it from a 10 years plus horizon, using the compounding effect, you will get benefit out of it for sure. That's what the history tells us. Now, nobody can predict future, okay? But based upon the historic performance, we can at least assume things may go in a similar way. Here's another reason. Because as I mentioned, the currency debasement is the real inflation. When the government tells you that inflation is 2.6, that's totally lie. The real inflation is the currency debasement, and that is more than 2.5%. Okay, to some extent, it's around 10%. When your currency gets depreciated, then of course the real assets, the hard assets, are going to get expensive. That includes real estate, stocks, gold, and cryptocurrency as well. Now, when it comes to cryptocurrency, I will only invest into the top 5 coins, not everything else. Everything else is just speculation, and you never know whether they will survive next year or not. The top 5 coins from the market capitalization perspective, at least they have been proven over the last 6+ years that those assets are likely to perform in the future as well. Okay, nothing is guaranteed, but based on the historical performance, I would definitely invest into the top 5 coins, then gold, the technology stocks, which are going to be benefited by the AI, because AI and crypto, these are the 2 technologies drive the future. The traditional way of investing, like 60-40 portfolio, keep some in equity and some in bonds, that's gone. Okay, that's not gonna get you anywhere while the currency is being debased at 10% every year. Anyway, you let me know what you think about that. How are you protecting your finances? Check some links in the description below. There's some stuff for you. You can start investing today by clicking the Questrade link in the description below. You can start investing into Dubai real estate market, clicking the stake link in the description below, and get 200 dirhams free to start with. And you can also start investing into crypto by clicking the Coinbase account, and you get $10 worth of Bitcoin free in your account. And also check out the newsletter that I send out every week. If you are interested reading about these topics in detail in simple English language, check it out and let me know what you think about that. I'll see you in my next video.